One of the most popular assets that are traded in the Forex market today are assets like gold, Nasdaq, US30, and popular FX pairs like Euro USD, Great Britain Pound USD, and all of that. And if you check on the comment section of my videos, I will see most of you guys are asking, how can we trade Nasdaq profitably? So I got you covered on this video. I'm going to be showing you guys step by step my secret strategy I've been using over the years to make money trading Nasdaq coming up right now. All right, there's no intro for this video because I want us to quickly jump into the video. This is almost 9 a.m. my time in South Africa, which is when the London session usually opens, and the strategy has to take advantage of sessions. All right, so let's just start here on my screen. The strategy is simple. The strategy is called GUORB, now with a modification to work for Nasdaq. Remember, I might give you a strategy. The reason why it wouldn't work for you is because you didn't pay attentive to you didn't pay attention. You were not attentive to the modifications of that strategy. All right. So you need to actually pay attention to the modifications that I'm going to be giving for Nasdaq. All right. So for Nasdaq, simple. If you want the full video I already made explaining the GUORB step by step, it's almost about 30 minutes or so. Just click the link above or just go on my channel and check GUORB. You're going to see the full video. But now for Nasdaq, there are modifications you must make for it to work. So for Nasdaq, first modification again is we're going to be trading strictly the London and the New York session. That's it. All right. We're going to be trading the London and the New York session. We're not going to be trading the ASEAN. We're not going to be trading the Sydney sessions, just the London and the New York session. And again, we're going to be trading the London and the open and the close of the London session, and only the open of the New York, meaning we're not going to be trading the close of the New York, because by the close of the New York, the market is already dying off. So that's something I also want us to pay attention. All right. So that's the first modification. The second modification is, instead of going for a risk to reward of 1:2 as we used to go for other currency pairs, we're going to be going for a risk to reward of 1:3 on US 100 or on Nasdaq. Nasdaq is also known as US 100. The reason why we are doing this is because the pair trends a lot. US 100 or Nasdaq trends a lot. So we want to take advantage of that. That's why we're going for a risk to reward of 1:3. Modification number 3, we're going to be using a trailing stop on this one. Since we're going for a risk to reward of 1:3, we will need to trail our stop. Meaning, so long as the market has already gone in our favor, we're going to be trailing our stop equal to 1 arrow. What do I mean by 1 arrow? Meaning, if we are targeting a risk to reward of 1:3, so long as the market has already gone in our favor by 1 arrow, we're going to be trailing our stop equal to the distance of our risk. So I'm going to be showing you guys a typical example once we start taking some live trades. All right. So let me just go back here, and I'm just going to take some few examples from Monday. We're going to backtest for the whole of this week. Let's just go on replay trading. We're going to start here, right? We're going to start there, and that is it. So now we are trading as if we're not in the market for this particular day. So what we are doing now is we are just looking for the first London candle. Remember, the strategy is simple. We place, so long as you have if the London session opens at 9 a.m. and then we're taking the candle from 8:45 to 9 a.m. In 8:45 to 9 a.m. we're going to put our buy stop and sell stop below and above that candlestick. So just keep going until we see the 9 a.m. candle. So let's go. That's the Tokyo. After the Tokyo session, I can see that's the London session. So long as I see the London session, it means my sell stop would have been there and my buy stop there. Since we are going for a risk to reward of 1:3, you can see my sell stop would have been triggered. My stop loss is obviously here, and a risk to reward of 1:3 is obviously somewhere here. That's it. That's 1:3. So let's play now, and I'll show you guys how you would have traded your stop. Can you see that? So the market is already pushing against, it's already pushing in our favor. Let's go. Okay. The market is we are still in the money. Perfect. So at this point in time, if I can just do this, you'll be able to confirm the market has already gone in our favor by 1 arrow. Let me just go. This is 1 arrow here. So at this point in time, our stop loss is going to be at break even. Remember, we are trailing our stop based on the first distance of our stop loss. So by this time around, our stop loss is going to be standing at break even. So let's put it back at a risk to reward of 1:3 and continue. All right, good. So let's continue and see what would have happened. Perfect. At this point in time, remember the market was here when our stop loss is here. Now the market has gone down by risk to reward of 1:2, meaning our stop loss now is standing on where our risk to reward of 1:1 would have been. Meaning our stop loss now, our trailing stop will be standing somewhere here. Meaning we've already blocked in almost about we've already blocked in about 300 pips. Meaning even if the market has to go against up, we will still come. If we are risking 1% per trade, we've already blocked in 1% of our account. You see, so that's just the meaning of trailing stop. So now we are already standing there, and you see the distance. So we are always giving a distance of 1 arrow between our trailing stop and the current market price. So let's see what would have happened. Let's see what would have happened after that. Okay. So the market went against us. It would have triggered our stop loss right here. Remember, our trailing stop was here, so we would have been triggered right here. So it would have come out of this trade with plus 1%. That's how you trade your stop. Unfortunately, it didn't go right down to a risk to reward of 1:3, but for this strategy, we go for a risk to reward of 1:3. So now we are just looking for the start of the New York session. All right, we look at, okay, that's New York. This is the New York candle right here, meaning we'll have to use this candle right here. This is the New York candle, meaning we'll have to use this and this. And as you can see, our buy stop was triggered right here. That's our buy stop triggered. Remember, our stop loss is going to go below this candle, and we'll go for a risk to reward of 1:3. Boom, that's it. That's a risk to reward of 1:3, and we're going to trade our stop again by 1 arrow, or if we're risking 1% by every 1%. So let's go to see what would have happened. Perfect. Just the first candle, we are already up by 1 arrow. If I can do this, that's it. Already up by more than 1 arrow. So what we're going to do is our trailing stop now is going to be standing at break even. Our trailing stop is going to be standing at break even. So let's see. Okay, now we are up with 2% of our account. So our trailing stop is going to be standing on positive 1%. All right. So at that point in time, our trailing stop is going to be standing on plus 1%. So let's go. Perfect. Boom, we hit our take profit on that one. Remember, we already made 1% by the start of the London session. We've just made 3% of our account by the start of the New York session. So let's continue. What we are looking for now is the end of the London session, and that will be done for that day and continue the next day. So we just keep going. We're looking for the last candle for the London session. And the last candle for the London session. Let's go. Okay, this would have been, you can see this is the last candle for the London session. This is London, right? The last candle, it means we're going to use this one and this one, all right? So if we use that one and that one, you can see our buy stop would have been triggered there. And since our stop loss is right here, we would have gone for a risk to reward of 1:2. Let me see if, of 1:3, sorry. So 1:3 is right here, right, then there. So let's see. Now we are already up by 1 arrow, meaning our stop loss is standing at break even. This is already a free trade. Our stop loss is standing at break even at this point in time, since we are already up by 1 arrow. So let's see what happens after that. Okay, we are still at the same place. Perfect. We are almost heading to 2 arrows. So our stop loss is still standing there because 2 arrows is going to be somewhere here. So let's go and see. Okay, the market started pushing against us. Remember, our stop loss is still at break even. We have to follow our rules. Perfect. So we triggered our stop loss at break even. So this one was a break even trade. It was neither a loss or a win. So at the end of that day, we made plus 3% plus 1. We made plus 4% of our account that day, trading just US 100. All right, trading US 100. Remember, you need to start from the main video itself that explains the strategy in details, and then you come and watch this other video that contains all the modification. Now let's continue. Let's go to the next day to see what would have happened the next day. Remember, I want to backtest to the present day. All right, so we just going now quick because we're looking for the first London candle. Right after Tokyo, we're going to see London. So after Tokyo, then we're going to have London. So let's just push this right here. Okay, that's the London candle right there. So our sell stop there, our buy stop there. You can see our sell stop was triggered. So we're going to go on a short right here. And then we go for a risk to reward of 1:3. That's 1:3. That's it. So we are already down by almost by 1% of our account. So our trailing stop is at break even. We are already up down by 1%. So trailing stop, break even. So let's continue to see what would have happened after that. Okay, we are down by almost, we are 2% is around here. So we are still at break even. Our trailing stop is still standing at break even. So that's it. Good. We are almost hitting a risk to reward of 1:3. So our trailing stop is standing now on plus 1%. Meaning even if this market has to go against us, we'll end up with plus 1%. So let's go. Ooh, market started pushing against us again, but we are still, our trailing stop is somewhere here on plus 1%. So let's see what happened after that. Let's see what happened after that. Almost hitting our take profit. Almost hitting our take profit. Almost hitting our take profit. Boom. Take profit hit right there. Plus 3% start of the day. Let's go. What we are looking for now is the start of the New York session. So let's go. Start of the New York session. That's the New York candle right there. Meaning we're going to be using this one. So maybe this is going to be our first loss for the day, but we're going to follow our system meticulously without skipping any step. We're going to go on a sell position, meaning short is going to be here, and then stop loss is going to go here, and we go for a risk to reward of 1:3. Boom, that's it. Let's play and see what would have happened. Let me put it at the center so that you guys can see. Okay. All right. Boom. So just the first candle after that, we lost this particular trade. So remember, we've already made 3% and then we lost 1%. All right. So now it depends on you. It depends on you whether you want to still leave the buy, you want to still leave the buy stop in place, or as soon as the sell stop is triggered, you delete your buy stop. All right. Because in some cases, the first one might be a fake signal, and then the real one will be this one. So let's say in most cases I used to leave it. So let's say we leave our buy stop and it was still there. So in this case, we've lost 1% and now our buy stop is triggered. So let's put our buy stop and see. We're going to go on a long right there. Stop loss is going to be right here. And then risk to reward of 1:3 is going to be there. So let's see what would have happened with our buy stop being triggered. Boom, we lost that trade. So you see this. So if we're doing where we leave both our buy stop and our sell stop in place, we would have made a 3% here and lost 2% here. So at the end of the day, or at the end of that period, we are still up with plus 1%. So I wanted scenarios like this so that you can see. So you can backtest deleting it, you can backtest leaving it based on which one is going to work better for you as a person. So let's continue. What we are looking for now is the end of the London session. So I can see the end of the London session. Let me delete this so that we can see very, very clearly. Okay, this is the end of the London session. This candle right here. Sometimes if the candle is so big, I used to just, let me also delete this one. This is London. London ends right here. And since we are using the last candle, we have to actually use this one. Since sometimes if the candle is so big like this is almost about 40 pips. I used to leave that trade. Almost about 200 pips since we are trading Nasdaq. I used to leave that one to go. So what I'll just do is I continue to the next day. You can see this is exactly what I'm talking about. So if the candle is so big like this, I know the distance to recover is going to be too much. So I just leave that one to go. So that's it. I just continue playing, and I'm looking for the start of the London session again for today, which this is the start of the London session, and which is my current time as we speak. So the London candle was this one, meaning we would have already been on this particular trade since we're going to be using this candle. So we would have gotten in. London is this one, so buy stop there, sell stop there. We would have already been in on a long position. Long position would have been here. Stop loss goes here, and then a risk to reward of 1:3. So you see, by now we would have already been going to almost about 1 arrow very, very soon. As soon as we get to 1 arrow, we're going to put our stop loss at break even. As soon as we get to 2 arrow, our stop loss is going to be at plus 1 arrow. And remember, it's a trailing stop, so this is going to be happening automatically, right? I'm going to show you guys how to put a trailing stop on your trade. So for example, this particular one, our risk was 321 pips, all right, or 321 points. So let me show you guys how to put a trailing stop. So we're going to be taking this same one since the market just opened. So we're going to treat it as if we actually took that one. And I'm going to show you guys how you can put your trailing stop. So let me just delete most of this. So this is a clean template, and we're just going to shift it like this. Okay, this is it. This is it. We currently have, no, let me just use this guy. I think this was just a backtesting account, but we're going to use it in a way. So let me close this one. Let me just close this one so that you guys can see this very clearly. Nasdaq, we have a trade on Nasdaq. Sorry, we're going to close. So this is actually a 100K account. I'm down with almost about 5% of the account, but it is what it is. So let's let's assume we are buying Nasdaq, right? So Nasdaq, we go here, and remember you would have already put your buy stop and your sell stop, and it's already triggered. Now I want to show you guys how you can pull a trailing stop. So let's just click on buy. That's it right there. So this is Nasdaq. So to put your trailing stop, normally you go down, you right click on the trade, and you go to where it says modify. On modify, what is our stop loss again? Let's first of all put our stop loss. Remember, our stop loss was 301 points. It was 301 points, and our take profit is obviously been 930 points. So if we click, boom, okay, it's too small. We need to modify again, quick. We put it in terms of points instead of pips. So we're going to quickly add a 0. We're going to quickly add a 0 before it triggers. It's 0 again, boom. So, perfect. So that's our stop loss. That's our take profit. Now, to put your trailing stop is simple. You just right click on the trade again. You go to where it says, you go to where it says modify. But even before you go to modify, let's just check. There's trailing stop right here. You right click, you go to trailing stop, and you go to custom. Remember, you need to put it in terms of custom. All right. So you go to custom, and since your stop loss was 301 pips or 3,100 points, you put there in terms of points. So your trailing stop is in terms of points, and you click on OK. Boom, it's already there. Trailing stop is already there. You can see take profit this. Trailing stop is already there. You can always click to confirm. If you go under trailing stop, you can always confirm. If you go under custom, you see we have it right there. Meaning as soon as the market moves in our favor by, let's say, 300, by just 3,100 points, the stop loss is going to move automatically, and it's going to be standing at break even. As soon as it continues moving up, even if it's just moving by a point, that stop loss, that trailing stop will start moving by 1 point. We'll start following it. But at any point in time, the distance between the current market price and your stop loss will always be 3,100 points at every point in time, so that you don't suffocate your trade. So that's how you put a trailing stop on your trade, particularly when you are trading Nasdaq. And another thing you guys still need to pay attention is to calculate the lot size you're going to use for that particular trade. So now you need 3 things here. You need to know the account size you are trading with. You need to know the asset, which is obviously Nasdaq. And you also need to know the percentage risk per trade. So in our case, let's just say we're risking 1% per trade. Then you just go to any lot size calculator on the internet. All right, you can check Lionheart Funding Program lot size calculator, or you can just check another Nasdaq lot size calculator by Cashback Forex. There are many. Just type on the internet lot size calculator for Nasdaq. You're going to see many of them. Then you go there, you put where your stop loss is going to be in terms of points or in terms of pips. Put the current market price. You click on it. You're going to get the exact lot size you can use, so that you can only risk a particular percentage of your account. Trust me, go back and backtest this strategy, and you're going to see this strategy is having a win rate of between 40 to 60%. 40 to 60%. Meaning, even if the strategy is having a win rate of 40%, you're still going to be making money. Even if it has a win rate of 30%, you're going to be making money. Let's do some math. Let's do some math to round up, guys. Let's just say our strategy is having a win rate of what? Of 30%. This particular strategy, right? And we have a sample of 10 trades. Meaning, out of 10 trades, we're going to have 3. We're going to have just 3 winners. We're going to have just 3 winners, and we're going to have a total of 7 losers. 7 losers. That's the meaning of having a risk to reward of 1, having a win rate of just 30% or a win rate of 30%. Good. Risk to reward. Let's continue. I want us to do the math together. Risk to reward, right? Risk to reward is 1:3, meaning we are risking 1% to go for 3% of our account. That's it. Now let's calculate the winners. Since we are risking 1% to go for 3% of our account, the winners, we have 3 winners. So it's going to be 3 times 3%. Each winner is 3%. So it's 3 times this. So for the winners, we're going to have 3 times 3%. So it's going to be a total of 9% of our account, right? Then for the losers, remember to always put plus so that you don't forget. So put plus so that you don't forget. This reminds me, anytime I'm doing this with my wife, she doesn't put a plus or a negative, it's a big problem. Because putting a plus or a negative is going to remind you of whether it was a win or a loss. Then let's go on losses or losers. So it's going to be now 7. Since you are risking 1% per trade, it's going to be 7 times 1%, which is going to be equal to minus 7% of your account. All right? Minus 7% of your account. Let's calculate the net for the day. So what's going to be the net for the day will be what you made minus what you lose. So net for the day is just going to be equal to plus. Always put the plus sign. It's going to be plus 9% minus 7%, which is equal to plus 2%. Plus 2%. Can you see that? Even though you had a win rate of just 30%, out of 10 trades, you had 7 of them that were losers. 7 of those trades were losers, but you still ended the day with plus 2%. Show me someone who can earn even just the month with plus 2% of his account, and I'll show you a multi-forex millionaire. Just plus 2% of his account. If this was $100,000, this is $2,000 you would have made without any stress. If this was $1 million, this is $20,000 you would have made without any stress. And once you already have the skills to trade with $1 million, it's easy. There are people that are going to be running behind you to say, take this capital and trade for us, because you already have the skills that are working. So you see, this strategy is having a win rate of about 40 to 60%, but even if it's having less, but let's just say 30%, you are less unfortunate, you are very unlucky, you're still going to end the day as a profitable Forex trader with plus 2% of your account. And in some cases, we just did back testing, and there were some days we were ending with plus 4% of our account, plus 5% of our account. Remember, we are not even accounting for trades that were break even. Maybe some of these trades wouldn't actually be losers. They're going to be break even trades and all of that. So that reminds me, that takes me to the point which we just recently launched our licensed and regulated hedge fund, right? Remember, this is not for beginners. This is not for small investors. This is for people who want to take investing and passive income to the next level. So we've been working on this license for the past 2 years, and recently it just got approved, and we've already onboarded a couple of big investors, and this is an opportunity I'm bringing to you guys. So a hedge fund is simple. You only just bring your money to the fund, and the fund trades on your behalf. And for our hedge fund, we have one of the highest returns per month. We have a target return of up to 10% of any invested amount, meaning any amount you invest on our pro firm, you can earn up to 10% every month. And like I said, this is something which, even if you don't have time to trade, you can just bring your capital, invest on the hedge fund, and then you get your return at the end of the month. Then at the end of your contract, you can choose to get back all your capital plus all the profit you have made. So the minimum investment capital is $15,000. Remember, I said this is not for beginners, all right? So you must have at least $15,000 to invest in the hedge fund. We're making investing very, very attractive. We're making investing even possible to the layman in the industry. Sometimes when you have investing, you only think of $1 million, $10 million. No, we're bringing it right down to the level of a layman. So take advantage where the minimum required capital is still $15,000 before it goes to $100,000. So if you just want to find more about the hedge fund, about the registration, about the regulations and everything, check the link on the video description, and it's going to take you to the application form, where on the application form, you're still going to see all the details on the application form before you can apply. When you apply, our team is definitely going to get back to you. So definitely check it out. Check it out. Even if you are not interested, you don't have the funds, obviously you know someone in your network who might also benefit from that. So spread the news and check out the link on the video description. Check out the links again on the video description for anything that has to do with me, like the most viral Forex robot, Payflex Pro. If you want me to mentor you one-on-one, check the link on the video description, and I'll be very, very happy to mentor you. And make sure you are in my free Telegram community. And as always, check out the videos that are going to be coming at the end of the screen, or check out this video, which was a full video I made on GUORB, and I'll see you guys on this other video. Peace.